Good day. Ira Epstein of Linn and Associates with your SPDR ETF video, and this video is for Tuesday, the 27th of July, 2021, and we're in the afternoon getting on towards 6:30. Now tomorrow's going to be the interesting day. We get the FOMC meeting at the end of it. So we're going to get the announcement at 1 o'clock p.m. Central Time. We're going to get the Fed a press conference with Fed Chair Powell at 1:30 p.m. Central Time. What are they going to talk about? Well, the question should center on, are they discussing tapering? If so, when are they talking about it? My guess is they are talking about tapering. My guess is they're not going to tell you what they're going to do with it because it's not time to taper. But preparing for one, nothing wrong with that. They've already let the market know that. So they want to be transparent? Okay. The next thing that we'll be asking about or hearing about is inflation. Is it here to stay? Is this more than just transitory? Is it sticky? They'll answer that for us. The last thing that they have to be looking at is the resurgence of the Delta variant of COVID-19 and the impact on the economy. There's plenty of unfilled jobs. They're still not getting filled. We're still on a government plan, as you know already, where the government in 25 states is still passing out checks, and they're going to do so all through August, right into September. That will not help those states get employment going. So it's all those combinations. At the end of the day, I don't think we're going to get a lot of information. I think those questions will be out there, and I think they'll be sitting like that. But how do you trade into that? Well, the answer is you don't. You let it come out. You let the algorithms take over for a while. Always remember that if the market makes a bigger move, if it surprises us, you still have to go back to Asia. They're sleeping when that comes out. Remember the hour difference, it's 14 hours or so. They'll wake up, they're going to see that. They either like it or don't like it. They think the market overreacted or didn't react enough in America, whatever the party. It's then going to move to Europe, and Europeans will go, well, wait a minute, I don't know if I agree. By the time it all goes around the circuit, you could have pretty crazy action if you have a big move. If you don't get much of a move, you don't typically get much of a move out of those two parts either. So that's what we got to wait and see. You know that the Cathie Wood Investments have been dumping Chinese stocks in this market. This whole rally back up from this low has just given a chunk back, but not all of it. This market got beaten up earlier to the $97 level, got back to 132. You're tonight 118. Is it an uptrend? Absolutely not. This is still with lower highs, lower lows. I mention her because she's always in the news. They owned a lot of Chinese stocks. That's the nature of what they do. They're dumping them. They made that very clear. What's really going on is China wants those companies to not list in America. They want them to list in Hong Kong, where the, how do I say this? The compliance rules for what we get to know are substantially different. They're the Chinese rules. In other words, you can hear one thing, is it even true? You're just betting because you think it's a name in China you want to own. It's very difficult, and you're seeing the pressure on that. And if you look at the Chinese indexes, they've been taking a beating this week. When you look at where the market's trying to hold, it started at the 200-day average. This whole rally back up while I was gone culminated against the 18-day average of closes. This rally that came from here fell back, and as I teach you, often a market goes to the 18-day average and it'll play there. It doesn't generally just slice through it to determine what next. Well, it broke down, rallied back, and it's still failing in the market. It would have to get back over that 122.25 area for me to think, okay, it's worn itself out. I'm not seeing that at this point. I'm seeing bearishness in that. When I look at where it might go from here, if it gives up the 100-day average by much, it could, if it slips back further, hit that lower Bollinger Band. But I'm looking for big support against that 114.75 level, and momentum, which had turned up, is now starting to shift back to the downside, which is not overly bullish. I would call this market still very much in the bear camp. Apple, we have the pattern of higher lows, higher highs. The easy money, if there's such a word, was made here as the market kept coming up with an embedded reading and kept hitting that Bollinger Band, and that's that enhanced Bollinger Band course I have, and it just kept doing it. It was a dream set of trades. Now you're in the noise of that. The market slipped back. It's consolidating that gain. We have Apple earnings we just saw. Now we're going to get the new Apple phone in another 7 weeks or so. So it's hard to be overly bearish on this because a new phone, if this has what it's supposed to have, it'll get some traction is my guess. PAVE, what are these senators going to do? Chuck Schumer is saying you're not going home to the Senate. And if you do go home, I'm calling you right back until we get a deal done one way or the other. Now, one way or the other means either with a bipartisan group or by it not getting that, at least the votes where it either passes or fails in the Senate. If he goes that route, I think he's got a failure on his hands. If he goes bipartisan, he's got a better chance. There's so many different politicians trying to create issues with this, and I'm talking for just that first step. It's very difficult. I appreciate that, but the chart is bullish. If you take off all the noise, get rid of that, you've got an uptrend, you're overbought. Would you want to buy an overbought condition? I don't think so. So while the trend is up and the market's doing exactly what I teach in my charting course, went to the 18-day average and fighting its battle there, it hasn't been able to break out one way or the other because it's already wasted a lot of energy. If it does move higher, I look for serious resistance at 26.29, and that'll mean nothing in time if they get a deal done. Do I think I'm waking up tomorrow morning to a deal? I don't, but I'd love to hear that that's good. I happen to think it'd be good for the country, but that doesn't mean it's going to happen. AMC staying underneath the 18-day average. That makes that stock fairly interesting to watch. While the trend is up, the bias is down, and you've worked off an overbought condition. Be careful, that's still not a bearish pattern. XSD, the semiconductors, all I'm reading about now is that the shortage is going to end and auto manufacturing is going to pick up. Yet I'm watching platinum and palladium prices nosedive and the semiconductor ETF nosedive back to the lower Bollinger Band. You know what I'm going to tell you. I think that's where the pros are taking money off the table. They did it here, they'll do it there. That's what I think. And the market's not even oversold. On the rallies, I think it'll get hit on good rallies. In other words, sold. Potax still looks bearish to me. It looks like never ending to the downside. Once this market back in June got under the 18-day average, it's just been with downside bias, which means if you understand bias, you're looking for sell signals, not buy signals, and it keeps offering them. This market's looking lower. What about embedding? Well, both numbers are under 20 on the slow stochastic on the close. They were also that way on Monday, and on Friday they were too. You're a fully embedded reading. So until the red line closes back over 21, I think any rallies you get in this market are going to be met with selling with an ultimate target of the 1073 level. In ESGU, you've gone from the lower band to the upper band. I call that move the psychiatry move because you go nuts. Why didn't it follow through further there or up there? You know why because you're watching me, but the average guy has no idea. And in looking at what this is doing, it's noise. I mean, how do you just pick a bottom to buy it and it's going to go up that $4 for you? Sure. You know better than that. In the energies, even though you're in an uptrend with the higher lows, higher highs, the bias is down since you're under that 18-day average of closes. You're working off present tense and oversold condition. That's not a bullish chart. That's a bounce and a bearish chart. The emerging market ETF, okay, that was clearly overdone to the downside. Now, this market's probably waiting to see, does the Fed do anything where people again can do something with the emerging markets? Your bell is if the market hits 79.38 because that would give you higher lows and a higher high targeting potentially the 80 level. What's the negative to the market? Just closing back under both these moving averages. So when you got over them, just like this, if you pull back, the first support's the 18, then the 100. You're in a downtrend, but you don't have downside bias because you're staying over those numbers. You haven't been able to do anything yet. GLD, look at how it's caught between the 100 and the 18-day average. It's in a downtrend. The bias is down. It has used up a lot of selling power. This market is very oversold. Gold miners, a little different pattern. Higher lows, higher highs. So the trend is up, but the bias is staying down. The two negate each other, and you're oversold as can be. TLT, while we keep watching interest rates fall, we're not seeing it on this. This chart has been saying there's a problem. Now, we did something. We had a bullish crossover. I want you to look at this 200-day average, and here's the 18. Where'd the crossover happen? Today, on the close. So that's still going to be a test area for support. We'll see what goes there. You now have, if you think about it, the 100-day well under the 200. It's not the ideal bullish setup, but it's certainly a bullish setup. Now, in saying that to you, I want to come back to that. You have to take out 149.81 in order to get bullish this chart. If you hit that, then you have the higher lows, higher highs, over the 18-day average, momentum flat to turning up, and you're starting to target 151.39 unless you get back under the lows of 3 days ago. That would break the pattern of that. In the Euro, you just went back to the 18-day average, neutralized the chart right in front of tomorrow's report, and why not? Currencies are going to look at what the Fed does, and they'll react off of it. So that's where you're at with all that at this point in time. When I look at what I teach, well, if you haven't seen my charting courses, you might want to go on our website and look at this one. This is the charting course where I teach swing lines, moving averages, slow stochastics, Bollinger Bands, window envelopes. 5 indicators. Swing lines defines trend and risk. Moving averages offer you bias and support resistance points. Slow stochastics, complete momentum as I view it. And it's a whole different way of looking at it because it often leads price. Bollinger Bands, well, it's an algorithm designed to keep the market within them 95% of the time, but you don't always hit them. You will more times than not hit the window envelopes. So you put the 5 together, you come up with an idea. There's 54 videos, about 8 hours in my course. You see what I do, you do the same, and we give you the charting software that'll do that with the data, so you go right back in time to when I recorded the course, and then I bring you up in the morning with my updates so that you're able to say, gee, I see what he's talking about, I get that, and if not, you can call my staff or me. We do explain things to you. Pretty simple. How do you find out more? Go to www.IraEpstein.com. It's pretty simple. Go under the word education, it's there, or call my staff. I'll look forward to talking to you tomorrow. We'll have a lot more to talk about as we're finally going to be through with this FOMC meeting. Then we've got to look at some other parts that are going to come up soon, GDP and other numbers. And in another week, we're going to be looking at jobs data again. So the cycle goes, but tomorrow's a big day. Take care.